For those of us who were at the last meeting where we're looking at trying to locate where we were in the market, we discussed that using weekly highs and lows would be a good way of letting you know where you are in the market. And we say it happens more times than it doesn't, because it's been statistically proven that price will range more times than it will trend. So if we have to put a figure to it, hopefully you can hear me. If you have to put a figure to it, we would say price will range on every time frame. On every time frame, price will range usually between 65 to 75% of the time, and then just trend for the remainder 25% of the time. And one characteristics of a range is that it basically just oscillates like a sine wave up and down. And while doing that, it will be taking out liquidity of the previous week, which usually will be last week's high will be taken, then price drops. It takes out last week's low, and then price rises, right? So we said there are times price will eventually trend. And if price will trend, we expect price to take out last week's high, assuming it's trending upwards. They'll be looking for some form of support here for it to continue its move to the upside. So whichever case, using last week's high and low as our reference points in conjunction with the H4PC as confirmation will let us know if we should be predominantly buyers or sellers. And that doesn't mean we'll sell or buy throughout the week. Price will usually give us midweek reversals at times. But just so we could have a sense of direction when we come into the market, at the beginning of the week, let's say Monday. So we had a very good trade on NZDJPY. We had a very good trade on NZDJPY playing out this week. It was a textbook. Trade. For the purpose of this video, permit me to let's have our previous week high as red, so it delineates sell opportunities, and previous week's low as blue, delineating buy opportunities. We could even make them slightly thicker. All right, so just see this happening. This NJ, right? Notice, let's start all the way from here. Right? NJ approached last week's low. This was the low of the previous week. NJ approached it. Right? We'll be looking for the AQZ qualifying candlestick at that point to take our trade. Right? This was the first approach to that point. You might want to take this to be an inside bar. This week didn't really play out that much, but you could have caught some pips. Then the next week, we had the next approach. Sorry. Okay. We had price approaching the low again. You would have had your AQZ qualifying candle. Once it broke it and went the opposite direction, you know you're selling for the remainder part of the week, and that played out powerfully, right? Then this week, the week on the screen, the very first candle of the week contested the previous week's low. Then it gave you an AQZ qualifying candle of a bearish engulfing. I explained last week how to treat this. In this week, we could have had massive buys all through the week simply by having our buyers framed around the previous week's low. We could have bought all the way. Last week, they really didn't play out that much. We might not have gotten an entry based on this method of looking at the market, but we'll have 28 pairs for us. Now look at this week. Just look at this week. I approached last week's high, and I gave two methods of doing this. If you don't have the time to sit in front of your chart, You could use your 4 hours. The AQZ qualifying candle here is an inside bar. And you know how we treat an inside bar. We basically will fib this inside bar. We'll basically, let's call up our magnet. We'll basically fib this inside bar, right? Once we see rejections from last week's high, we know we are basically bearish. And this was our sell trade that basically is still playing out throughout this week. Now, I gave us a hint that if you want to catch sniper trades, and you could actually do this on 1 hour. Let's call up our H4PC. Call up our H4PC. Then we'll go down to 1 hour, where we had price approaching the previous week's high. Okay, so when price approached previous week's high, we basically had no AQZ qualifying candle, right? This isn't an AQZ qualifying candle. This isn't an AQZ qualifying candle. This isn't an AQZ qualifying candle. The very first AQZ qualifying candle we can find is a bearish engulfer. And then we would have fibbed out our bearish engulfer. That was our breakout. That was our retest. That was our 1:5 trade done on NJ, simply because we were able to spot, possible turning point in the market, right? So we're able to spot possible turning points in the market. And I mentioned last week also that in a bearish trend, the bullish candles are our friends. In the bearish trend, the bullish candles are our friends. That was clearly mentioned last week. So I'm going to show us how we would have also played this. Let's have this for only entry alone. So basically had that as our entry point, and then it gave us 1:5, 1:6 or thereabout. That was the highest bullish candle before the drop. For those of us that are familiar with Break the Bank, Papa Pips has taken so much time breaking that down for us. That was the highest, largest bearish candle before the drop. We basically didn't have price returning to them. So you could actually fib out every bullish candle on your way to the top. We could actually be fibbing out our bullish candles in the bearish trend. So we had this push to the downside, would have been anticipating a push to the upside and then a sell, right? That could have been one way we would have traded this. I won't be using this inside bar because it's too large. That inside bar is too large for me to consider. And that simply means that it would have been difficult for me to mark out this bullish candle also. I would have been anticipating price coming back all the way to this top. But for the purpose of illustration, I just want you to see what bullish candles could do. So this is a bullish candle here. This is a bearish candle. That was a retest and a drop. I'm going to mark up the next bullish candle. This is another bullish candle. And we had a bearish breakout, a retest of that bullish candle, and then a drop. I'm going to mark out the next bullish candle. We didn't get a retest here. I'm going to mark out the next bullish candle. This gave us an inside bar setup. Breakout, retest, drop. I'm going to mark out the next bullish candle. Breakout, retest, drop. As small as this is, it still would have given us a 1:1 or maybe 1:2. Yeah, basically, so we got in here, would have had 1 hour, then maybe heading towards 2 hours at the tip there. So all this was simply because we were looking at previous week's high and low. I definitely wouldn't have marked up this candle yet. If I had sold, I would be anticipating price pushing back much, much higher before dropping based on this strategy. But if you want to use the bullish candles like we mentioned, so this was the lowest point. Once you start seeing price pushing upwards, you begin to mark up the bearish candles on its way up. You mark up the bearish candle on your way up for buys, and on your way down, you mark up the bullish candles. Let's see some other pairs for the week. Today is Thursday. Let's go back again to 4 hours and check up 1 or 2 more pairs and see how we would have played them using this. So we start from the top. We have AUD card. All right, so AUD card got here the AQZ qualifying candle. We can see it didn't take out the low, unfortunately. It just went up straight for the high. Didn't really give us any AQZ qualifying candle as at this point. We finally got one, which was a bearish engulfer. We would have had this way, right? So if we on AUD card, that was a PE trade, and we had a 1:. If you enter that PE, then this would be TP1, TP2, TP3, TP4. So basically had a 1:4 trade on AUD card for this week based on this methodology. Of course, we had that AQZ bearish PC there, which would have given us an invalidation and a violation simultaneously, and then would have gotten our buy. And let me mark that out. So we had a bearish AQZ this way. Let's take out the previous one. So we'd have had a H4. Let's have both ways fib here. So we had violation, invalidation, retest, and then would have traded this buy up all to yesterday's previous week's high. But you know, it's easier to see in hindsight. You just have to you must have a structured way of looking at the market. For newbie traders, picking up a candle in the middle of the chart could be troublesome, because which would you be picking? Would you be picking the bearish engulfing or the bullish engulfing? That could become problematic for newbies. You might just want to structure yourself around maybe weekly highs and lows and find a way of taking the trade. So AUD chef, I think we've taken one AUD trade. We might just leave the AUDs, but again, you see how AUD chef basically would have played out again. When did we have this massive drop? After last week's high had been taken. So last week's high was taken, and you can see on the screen, and then we had this melt, right? If you have ample time on your hands, you simply go down to 1 hour and do this. And if you use this indicator I have here on TradingView, I use the premium, what version am I using? Yeah, the premium version on TradingView. If you have a version that is not free, you could set up 10, 20 alerts or so, right? So you could simply just come to the previous weekly high and low, click on those 3 buttons there and add an alert, and you get an alert when price, and let's just do that together. You click on add alert, and you're going to say condition is going to be AUD chef crossing, instead of value here, you have a previous weekly high low, right? And it will alert you. If you have the mobile app, it will send notification to the app. It will also show up as pop-up on your screen. And I love the ringtone. Is very, very loud. You could hear basically from anywhere in your flat. And to also send an email to you, right? Very, very interesting. So once you do that, you don't have to babysit the chart. Once price approaches your weekly high or low, you would get an alert, and then you could come stage your fib on the qualifying AQZ candle and then take your trade. So let's see how we would have traded this on the 1 hour. So if we go down to the 1 hour right now, we'll definitely get an AQZ qualifying candle somewhere around that point. So on AUD chef, when price approached previous week's high, it gave us an inside bar, which is an AQZ qualifying candle, and would have fibbed this to the downside. right? We would have flipped this to the downside, anticipating a break to the downside for us to sell. But let's assume we didn't know it was going to be a sell. We would have been anticipating, since it broke out, it's going to be a continuation trade to the top side. No problem. We lose gallantly, and then we take up the rest. So here we have price breaking above last week's high. We would have been anticipating buys from this region, and it got invalidated, and then we would have resumed our sell. Again, remember, when we are selling, we are looking at our bullish candles. We keep marking up the bullish candles on our way down. And anyhow, you would have caught some trade. I'll give us some example with this likewise. So, okay, so let's take this. Let me make this entry alone. Okay, so in this case, slightly different from NZD JPY. After that impulsive move to the downside, I had this bullish candle response for that low. So I basically would have flipped this bullish candle. I would have flipped that bullish candle, right? And of course, I got my sells. Then price broke above it, closed above, I'm buying. Price gave me a break in structure in terms of this bearish candle coming to the downside. And once that happens, I begin to mark up the bullish candles to the downside, because my bias has been bearish simply because I rejected off a weekly high. So I have that bullish candle to the downside. Price traded back into that candle, and I'm taking my trade to the downside. The idea is not to win every trade. The idea is not to get it right in the very, very first trade. The idea is to have a high risk-reward ratio trade. So you could be looking at a 1:5 risk-reward ratio trade. And to be able to get 1:5, is there's every possibility your very first two tries could be losers. Your very first 3 tries could be losers. Then eventually you get a 1:5, and now you've made up for your for the losers, and you have something to take home for the weekend. So notice that massive drop from that bullish candle there, right? Retest, and then it dropped. This is a 1:8 if possible risk reward trade right about here. Notice you would have had some losing trades in between here. Part of the game, we can't win everything. Let's leave the AUDs and maybe try CAD CHF. All right, let's take out all drawings again. All right, so here's a good example of a retest and continuation trade. Price left off, came straight to last week's low, gave us this AQZ qualifying candle, which is an inside bar. We would have marked up our inside bar, waiting to see what will happen, right? Waiting to see what will happen. We got a break to the downside, and this invariably meant we would be selling. Unfortunately, we might not have been able to catch that sell if you mark it up this way. You certainly might not have been able to catch that sell, except you have another method of doing that. Let's see how we would have played this on 4 hours. All right, so on 4 hours, again, price approached that level, gave us an inside bar. Yeah, we still wouldn't have been able to, let's see, give us an inside bar. And remember, for an inside bar, we don't take action until we have a breakout. Right? For engulfers, we take action instantly, because engulfers are take action now trade. But for inside bar, we wait for a breakout, either bullish breakout or bearish breakout, before we take our trade. So this would have been a missed opportunity. It could be painful, right? Because we had massive drop, and then we're not there to actually take the trade. Here's another wonderful one again. Break, retest, and then push to the downside. What are we retesting? Weekly lows. Weekly lows. This is a very interesting concept for me, for guys that are new. Here again, we have another one. Price came up straight into last week's low, right? Took it out, and after taking it out, we're looking for candlestick patterns to drive this. Let's say we might have gotten a trade here on We might have gotten a trade here on the 1 hour, Euro AUD. We might have gotten a trade here on the 1 hour, who knows? See that retest to the weekly. Clean retest to the weekly and then rallied. All right, so let's see this. The AQZ qualifying candle would have found, I don't know how to call this now. This doesn't look like an AQZ qualifying candle to me. It doesn't look like an AQZ qualifying candle to me. So we kept going. Unfortunately, we wouldn't have found something very, very clean to have taken this trade. And it does happen. We eventually got this PC here. And that made us to buy. But again, we wouldn't have gotten a clean cut entry based off AQZ qualifying candles. Right, so one more, and then we'll move to the next part. We'll check if we can find pairs to trade. We're done with AUD. Let's go to GBP pairs or USD pairs. Or somebody wants to suggest a pair. Somebody can suggest a pair for us, actually.
Coach, if you look at US 30, that's
US 30.
Yeah, if you look at it, Coach, right now, it's like it could be a real life example because it's just broken. I think it's just touched last week's low. Oh, there you go. Yeah.
Yeah, but the trade for us would have been on Monday when it took out, or Tuesday when it took out last week's high.
Okay.
You know, with this strategy, I know we usually preach focusing on just one pair and the likes, but there are some people that naturally cannot be dedicated to any single pair. Right? So if you're not dedicated to any pair, no problem. It means you might not understand the nitty-gritty of the pair, but at least you could visually see when price sweeps the previous week's liquidity. So in this case, for US 30, wow, today is a very bloody day for everything. Crypto, everything. Yes, US 30 melting. So you wait for price to approach. So on 4 hours, when price approached this region, what we could see, the qualifying candle we could see is something like an inside bar. We would have filled this because it is an inside bar. Remember, for an inside bar, we need to see a breakout. So when the breakout would have occurred in a bullish manner, so we would have marked this up as a bullish inside bar, right? We would have marked this up as a bullish inside bar. Price broke to the upside, we'll be anticipating buys, thinking that this would be a continuation trade to the upside. It failed and came back down, and then see that massive drop, right? See the massive drop after it violated the massive drop. This is a 1:5, 6, 7, 8 trade, right? Because you're taking it from a key area, right, in the market. You're taking this from a key area in the market, right? One thing I also forgot to mention when doing this, once your direction has been established, you could begin to take the PE of the inside bar inside the week. So for instance, I think we saw one or two other examples. This is the very large candle, but this is like an inside bar. You could decide to take trades from around the PE for a continuation move to the downside. So yes, I agree. We just sniped last week's low, but I've not back tested the counter trade in the week. What I've back tested and what I know, what I have data for is trading the week very early, like Monday, Tuesday. Some days these retest of the previous week happens as early as Sunday, right? So as early as Sunday should have given you an AQZ qualifying candle, and you begin to frame your entry. When you get an AQZ qualifying candle playing out with an H4PC like we see in US 30, it could be very, very powerful, you know, and you don't need more than two trades in a week to actually. Let's see gold. I know we have a lot of people who love gold. So here we are on gold. On the H4, price approached, but didn't give us AQZ qualifying candle. It pushed up a little, then finally gave us an AQZ qualifying candle here. Now, there could be some confusion here. Which of these would you fib? Would you fib the engulfer or would you fib the inside bar? Well, for AQZ and AQZ related concepts, you could fib any, right? You eventually win one or lose one, as the case may be. I prefer to fib the candle to the left and then the candle to the right, because price approached last week's high, didn't give me. So I've been watching out for an AQZ qualifying candle. Once this bearish candle printed, then I simply would have gotten an AQZ qualifying candle here, and I'll be anticipating my sales from this region. So it broke above, and now I'm thinking that this is going to be a buy. Again, this played out just with AQZ fib. So I don't know if you have any question. Here was gold last week. Very wonderful trade on gold last week. So if you use that concept, it would have been in this buy. And remember what I said, when you are buying, your bearish candles are your friends. So we would have fibbed this bearish candle, and then we wouldn't have gotten an entry, no problem. We would have fibbed this bearish candle, and that was our entry straight to PE, and then price rose. Then we would have fibbed the next bearish candle, which happens to be this. This was the breakout. This was the retest, right? This was the breakout. This was the retest to the bearish candle, and that was the massive move to the upside. We could have fibbed the next bearish candle again, right? And then by then the week has practically ended. So if you make up your mind that you are ready to take some losses, why not? We take the loss as they come, but we'll never take a trade for 1:1. We always want to take one. Our risk reward ratio has to be greater than a factor of 2, and the higher it is, the better. So let's see if there's anything we could actually trade today. I'll leave the other one on futures till another day. So we practically, take this out. So this was it for USD CAD. This was a break, retest, and a continuation move on USD CAD. But that was a massive sell on USD CAD 2 weeks ago. It took out the previous week's high, gave us an AQZ qualifying candle, and melted away. So we could have gotten a very good entry on 1 hour on USD CAD. And like we say, if price ranges most of the time, then why not just catch the range? Eventually, when it breaks out and start making its move, we'll still be able to catch it one way or the other. Let's see if we have something. Today is Friday, and Thursday is usually not the prime time for this setup. Prime time will be Monday, Tuesday, so you could catch the initial move in the market. We'll catch the initial move in the market. All right, we have AU playing out now, but no AQZ qualifying candle. We have Bitcoin playing out. It's an inside bar. We'll wait for a breakout, bullish or bearish. All these have played out already, unfortunately. So that was why I was saying after the class, I didn't get anybody, doing this. I was wondering if we were really adding value to anyone. Massive trades, massive trade coming up here. Here is another one for this week. Euro card, massive one. We didn't get an AQZ qualifying candle onto this region, but who says we might have gotten an AQZ qualifying candle on the 1 hour? But notice how it played again, took out the liquidity of the previous week, and then went the opposite direction. Sweet. If we do this week in, week out, even blindly, we would lose. And of course, no matter how refined your strategy is, you surely lose sometimes. But here's another one. Price came, Eurochef broke, retest. Would have been anticipating a push to the upside, but they broke and retest and they went the opposite side, right? Again, massive trade. EG. EG would have been confusing this week. Let's see. Yeah, it would have been confusing. Here we have the AQZ qualifying candle, not too clear. Here we have a bearish engulfer. So for this bearish engulfer, we would have had the first trade of the week, price traded into our zone. If you use BTB, you have your entry, and this trade, as small as it is, would have been a 1:3 or 1:4 trade. Then it practically just played around with us, except of course you mark up the bullish engulfing, and then you would have had that trade. But it's easy to say in hindsight, I might not have marked it up, so there's no point assuming it was going to be a winning trade. Here again, AQZ qualifying candle, bearish. We wouldn't have gotten an entry of the H4, but who says we wouldn't have gotten an entry of the 1 hour, right? And you're able to get your setups early in the week. See that same thing happening with EN, EU. Whoosh, EU would have played a smart one on us. Here is the inside bar. It broke to the downside. We would have caught some trades on EU. AQZ qualifying candle was an inside bar, broke to the downside. We would have gotten some sales. Now it's violating. We wait for a retest and then buy. Simple. Powerful trade here too. Inside bar. You wait for a breakout. The breakout practically occurred here. But I prefer trading this on 1 hour. You know, you get your entry very fast in 1 hour. You can react faster on 1 hour than it is on 4 hours. But that's because I trade full time. If you still trade and work, 1 hour might just be too cumbersome for you. And of course, you won't get entries every week. There are some weak price who basically just play within the zone and not really make any contact like it did the previous week. By the time it was coming, it was already end of the week, and there's nothing you could do about that. Here we are again, powerful trade. You would have gotten something on 1 hour to send you to the downside. Very interesting concept. Liquidity sweeps. You could do this with your daily high and low. Also, you could do this. I'll just mention this briefly and then I'll give room for questions and we'll call it a wrap. I doubt if we'll get any trade for this week using this strategy. We might get using some other ones. If I go down to 15 minutes, right? If I go down to 15 minutes, let me see. If I go down to 15 minutes and I call up my Asian range, call up yesterday high and low, and I'm using my AQZ qualifying candle, you see how NJ would have played out. Let's remove this yield curve. You see how NJ played out using the same concept, guys. The same concept. So this is yesterday high and low. Let's have previous week high and low too. Fine. So watch this. I'm not going to sell until a high or a low has been taken. I will only sell when a high or low has been taken, and I have two high or lows I'm looking at. Let me take this out from percentage, put it on regular. Great. So the high and lows I'm looking at are either Asian high and low, yesterday high and low, and for the purpose of what we discussed today, weekly high and low. That's what I'm looking out for. I'm going to get an early entry, very, very early entry when that happens. So you notice here, we have the beginning of a new week, right? You notice here we have the beginning of a new week. And you remember NZDJPY, we marked it up on H4, how it played out. And quickly do that here. Quickly do that here. NJ. All right, so that's it on H4. Remember how it went straight into the previous week's high, took out the high, gave us a very clear and wonderful 1:8 trade. Let's see how that played out. If you understand the concept of liquidity sweep, so here it is. At the beginning of the day, it practically took out last week's high. That's it in Asia section. Took out last week's high, pushed up, gave us our entry at that point, and then melted away. This trade alone is a 1:5 trade, right? Then the next day, it came up again and took out Asia high, still on the on our sell, and then gave us another wonderful drop to the downside up until today, right? So the concept is just liquidity sweeps, but I'm assuming many people might not have the time to be watching charts on 15 minutes. So you start with 4 hours, then go down to 1 hour. You always want liquidity to be swept, very direct. For those of you who love to trade this way, if you want to trade the usual H4, fine and good. You have a break, anticipate price coming to PE, and take your trade. But if you go back to the chart, you discover that anytime price approaches our PE, our preferred entry, is very close to liquidity being taken at some point. And that's and you can actually refine it down to 5 minutes and have very insane stop losses while you take your trade. So I'll give room for 1 or 2 questions. We'll call it a wrap. I doubt if we can find any setup. Today is Thursday. Let's see Ethereum. Any question, please?
Good evening, Bishop. Good afternoon, Bishop.
Good afternoon.
Yeah, sir, please check. Can we consider our last 2 weeks high being taken out?
Yeah,
Last
sure.
2 weeks, okay.
Yeah.
Because it's like it's check GA, it's like it's playing out on GA now.
Liquidity, I don't want to say so many things at the same time. I believe we have new people amongst us, but there is this concept of 3, right? We usually assume that price moves in 3. If you notice Elliott waves itself, if we go to Elliott wave itself, what you have is wave 1, pullback, wave 2, pullback, wave 3, and that's all. So if you go to BTMM, they believe you're going to have 3-level rise. Then you have midweek reversal. Most strategies talk about 3. So if you're looking at liquidity sweeps, of course, it could sweep 2 weeks ago, the high of 2 weeks ago, making it the 3rd week, right? And that will be in tandem with Elliott wave. So look at this: high of last week, high of week 1, high of week 2, week 3, high 5 takes out the high of week 3, then you have a massive push, right? It is possible, but sometimes there could be danger in too much learning in Forex. So I'll look at GA, no problem. But Ethereum, can we see it playing out on Ethereum today? Right? Ethereum basically came out, gave us an AQZ qualifying candle, which would have been a bearish engulfer. Retest of that level based on our AQZ stuff. This should have given us from that point TP1, TP2, TP3, TP4, and of course I could continue. TP5, TP6 for a total of for a total of about 200 and something pips, right? That's Ethereum. That's Ethereum for this week. Playing out again, sweeping liquidity and moving. So it worked with stocks, it worked with indices. Well, I don't know if it worked with volatility anyway, but for this I know. So GA, like you mentioned, GA, here we are on GA. Push too many markups. Did you say GA? it's just taking out last week's high, which coincided somehow close to the high of 2 weeks ago. Yeah, we'll wait to see what happens. It hasn't given us an AQZ qualifying candle yet, except you want to go down to H1 to look for your trade. But just look at this in GA, see how many times it's practically played out. Right, taking out the low, rising, taking out the high, dropping, taking out the high, continuation move, take out the high, played with you, take out the, high of the last week, then dropped. Played around with the high of last week, then dropped. Came, took out the high of the low of the previous week, rise, break, continuation move, take out the high of the previous week, drop. Then on this week, take out the low of the previous week, rise, and played around, and now we are here. Right, so I appreciate the fact that if you are new to trading, when you see charts, if we take out all of these things now, and let me take out the profit itself, one of the first things you find difficult as traders is you're approaching price on Monday or you're approaching price on Tuesday, depending on when you come to the market. Where am I? Where am I in the market? Is a big problem, right? Because somebody may decide to take this level as their reference point, which is the beauty of AQZ. It allows you to quickly find a reference point. At worst case scenario, you lose one trade and then you know what to do. Somebody may be taking this as a reference point and therefore will be anticipating sales. Now we have an invalidation and the person wants to buy. Another person may be looking at this as an inside bar and then I'm buying. Right? So if you are one of such that finds it difficult to find a reference point in the market, then weekly high lows, daily high lows, could be reference points. Price will respect them 70%, 65%, 70% of the time. Then the other times where it doesn't respect them, you would lose one or two trades and then you eventually catch the continuation move because AQZ tells us what to do. So I'll call it a wrap right now, and let's have a wonderful day, except if someone has a question. I think I can pause the recording right here. Stop recording.